February, and the video goes out 8:24 in the morning AM to pre-market open. And as usual, we've got the wheat chart in front of us, the daily November new crop wheat chart in front of us, and I've got displayed on it a 5, 30 and 60-day moving average, and I've got the Fibonacci retracements placed on the recent fall. Obviously, we've been looking at this fall since we dropped out over Christmas. This 150, 152 low, 151, went down and got a low of 142. I marked off my retracements, 38% and 50% retracement. And last night we came up and hit the first level, the 38% retracement. Also, if I've been looking at obviously running a 60-day moving average, that's a normal standard moving average over the price, and well, on the price, and just marking off here the amount of times the price was over it. And you see we had a test here in August, a test here in October, and a test here in November. The October and November were obviously within the run up in the market when we test this 160. The market has closed just on the 60-day moving average last night, so crucial level and at 38% retracement. So the market has come back to its mean of the last 60 days. So we're not oversold like we were in late January, early February. And if you were looking to market or sell wheat, obviously you would look to try and achieve the mean of the average of the last 60 days, which would be at today's level. But obviously the crucial now is, are we going to recover further? And what hints have we got? And that's obviously what we've got to keep an eye on the charts now. My thoughts are that we've still got a little bit to go on this upside, and I'd like to see the next level test of 151. Obviously, if we don't hold this 60-day move average and this 38% retracement, then we've got to look at something completely different, because we are in a downwards trend. We have broken a low from August. We are now coming up to test that bottom of that low at 150. So it's all sort of pointers are coming into it. And I think this is a crucial time that next sort of 2 weeks we'll see what's going to happen over the coming months, as we go April, May, June, as we run up to harvest. And this will give us a clear indication of this on this test of the 60-day moving average, and it's an important event, and also the recovery from the recent fall. I think the fall over Christmas was overdone, and it's always a dangerous time, as I put on my videos, and obviously light volume, and it reacted over. But obviously we'll just keep an eye on this as we go forward. On the old crop wheat chart, you can see that things are not the same, and we have still not come up to get to the 60-day moving average at 158. So there isn't the strength in the old crop as there is the new crop, though we have broken through the low of August, which is significant at 156. And then just while we're looking at the wheat, we'll just finally look at the US wheat market, which has been the forerunner of our collapse over the November-December time. And you can see I've run the Fibonacci retracements over this fall of the last since November, and you can see here that we've same as the old crop, new crop, November UK wheat. We're back to the 38% retracement level at 615. So that obviously we'll keep that's the same level. If we see a break of this 615, then I quickly see a run up to the 50% 635. So we seem to be following like for like with the US wheat market at the present moment. Which is quite handy to keep an eye on. Just finally also, before I leave the old wheat market, UK, over the last 5 years, 6 years, I've been watching the UK wheat market. It does tend to fill the gaps, and I haven't looked for a while. I'm just looking on the November contract, where we've got this gap here, the exhaustion gap, when we had this collapse just after Christmas in the New Year at 151, and that's the same as our 50% retracement, and all coming in together. So that is a key level, and I think that gap will get filled. So that gives me more confidence that I've still got more upside on the new crop. Eventually, sometime over the next 6 to 12 months, we will fill this gap here at 165. Whether we go back and test the low first, or whether we go straight up, that is obviously the job that we're going to keep an eye on over the next coming weeks and months, so we get a clear trend of what's happening, as we run into this April, May, June period. And finally, we just look at the Aussie rate market. You can see here, and you can see we're testing the downwards trend here at 385. We've tried to break through it. We'll come back and test. You can see here, just marked the four times that we've broken through, tested the 60-day moving average. You can see how much we're above it now. So I do think we're due for a retracement on this, the same as you were on the wheat. We got overdone and probably were a bit overbought on the Aussie rate, and it needs to come back to its mean a little bit. But not to say that the recovery is still not in play, and that's going to be this test of this long-term, downwards trend here at the moment. So obviously we'll just keep an eye on that test on that on the November contract of the 6-day moving average, and that will be crucial over the next coming week, and we'll put an update this time next week. Thanks for watching.